Alright, what's up guys? So I'm going to touch on RSI today, or the Relative Strength Index. And how you can use it to, give you an edge, so to speak. So pretty much the RSI is down the bottom here. The 50 is the middle of, I think it goes from 0 to 100. Yep, it even goes into negative, but I've never seen it go into negative in all my time looking at the charts. And so now, why are the values important, right? So the 30, anything around the 30 is classified as oversold, and anything above 70 is classified as overbought, and 50 is the mean, right? 50 is the middle, the mean, middle. And pretty much what we're looking for when we are using RSI is potential oversold areas, which is here. So oversold, right? And continuing on from our support resistance video, so there is support here, so we are looking for oversold at support for confirmation. So oversold, and then the strength moves back to the mean, right? So it comes back to the middle, so mean reversion, and we get that about here. Okay, so that's the midpoint for the 50, which the 50 in this situation, when it's coming back, it's classified as resistance when it's in the lower half, or the bearish territory. So when it breaks below, so it breaks below up here, right? And it has like sort of consolidation period here. That's consolidation of a lower high of the higher high here, right? And then we have a break below, yep, right here. So in this candle, break below, and we are breaking down, right? So if you were to use this for in this situation as a bearish confirmation, so you've got consolidation at the mean with a break below, close, and bearish continuation move back down to oversold territory. So, or which would indicate that there is potential support here. So RSI is used to find, it can be used to find market tops, market bottoms, or potential entries and exits. So obviously potential exit here, or exit here on the divergence, and we see the strength moving of the tops weakening as the price action goes up, which is RSI divergence or bearish divergence, and we would be looking for exits on the divergence and potential shorts, right? So market is still trending up, so until you have that break in low, so the break of structure here, you do have a break of structure there, and you get a major break of structure here. All right, coming back down, does never ever comes even close to the high. So it's pretty much going to confirm lower high right here, and a continuation down. So down. Now the further price moves away from the mean, okay, so once it starts to get into overbought territory in this case, depending on this is a very impulsive move, so it's gonna move just as much because it's got so much strength in it. So the strength of the math in RSI is also going to dictate this. All right, and we do have the moves weakening, which is true. Look, so RSI is giving you divergence as price is moving up. Like you have one impulse move there, which is decent, but then it's sort of like if you do break, retest, and then you come back, retest demand, break, you get a little retest there, comes down, right, retest demand, and then up. So RSI is going to give you this, there's not much strength in it because the moves in between the pullbacks aren't as strong as what this is. So you're going to get a clear strength of movement here. So this is your first impulse move on the daily anyway. So coming up, yeah. So I wouldn't expect a deep pullback. So 618. So you'd be on a move like this. You'd be looking at that 38.2, 23.6, depending on what your strategy is, and then using the springboard laws. So if it's 38.2, then your target might be to 61.8. If it's 50, then potentially between the 27 there, 618, 27. All right. If price pulls back, all right, the springboard effect, which I can do that in another video. So, but the main thing to note is that RSI is to have marked the 50. I usually always mark the 50 if I use it, and I understand that when it goes into oversold or overbought territory, that the deviation of that means that there's going to be a stronger pullback somewhere back to the mean. On RSI, it always comes back. This is it's called mean reversion. If you want to get into it, it's fine. You can look it up, but yeah, reversion is just a reverse of what's happened, and by definition, and the mean in maths is the median, so the middle. So that's what that is. All right. So we've got another oversold signal here. So what has to happen is it has to have a mean reversion, which it does. Okay. So it breaks the lows here. Doesn't even come close. Now the highs on a lower time frame are definitely being broken as price moves up forwards from here. Okay. So you'd need a bit to really make it work, so you're really looking for that breakout within here if you're on the daily. This would be where you'd be looking to buy and enter the market, and your selling point would be around here. So there are levels that are clear on Bitcoin like this. So but in obviously going against, if you're in the Forex market, Forex goes to like 1997, the data and the information. So you have key levels going back in, over centuries. Decades. But the markets have been open for 2022, for a century. You know what I mean? But the data on the charts would be, I think they started at 96 or 97 in regards to that. So with BTC being relatively new, it looks like we've got major support here, and hopefully we have the support increasing, from these levels as the long-term effect is the trajectory is up, right, over the long term. So that means that new support needs to be stepped up to progress Bitcoin. So the high, and then it just needs to keep progressively stepping up as time goes on. That will show real strength over time. All right, so that's RSI in that sense. Now you can break it down into the lower time frames, and so you've got your oversold territory. Sorry, overbought territory. Yeah, so what am I saying? Overbought territory here. All right, so you got your high here, your high there, right? Your high here. And look at that, so the strength is coming up and it's losing strength as the price is moving. So this is signals for divergence. So even though the high was broken here, it did a boss, also now it's got to break this high. Right, So now we've got a resistance level or zone. Yeah. Candles closed below. They wicked up. So potential shorts in here, wicked up, stop hunt. Okay, now we can draw, might as well, just, it's gonna be like that. So the supply zone, so your point of interest. Wait for short is in this zone here, right? So it's there. There's a bit of consolidation here, right? So people taking profit, people getting to short positions, the exchanges are happening within here, and then the imbalance occurs. And when there's no more, when all the buyers have either they've closed at profit, right? So that to take profits, they must be sold, and they either have to be sold to buyers or sellers. It doesn't matter who buys it, because the seller buys it, but it's like they're borrowing it. It's a borrowed contract, and they make the money on the way down, and then they sell it to the buyers who will buy it at a lower price. So that's a bit about how the shorts work. You know, it actually sort of spins my head out a bit sometimes. So, so your short would be there, right? And your confirmation on RSI would be here. Okay, so the strength there of the resistance. So it's your first signal, right? So your divergence is here, bearish divergence, and then your retest of the supply is here. Okay, so RSI bear divergence, mark supply / resistance, and retest and short the retest. So so shorting the retest is just coming up, it's coming in and then closing out. So it's come up, it's closed out, right? So somewhere around here would be where you want to enter your short position. So yeah, so I actually think I took this trade because I remember my stop loss being almost 3%, and I was like, that's a lot. That was a lot for me, you know. So I like to get like, you know, as high as I can, you know, 1 to 2%. So 3% was for me. I did not use RSI. I just used the supply zone, but you can get supply zone confirmation from the RSI, which is what we're talking about. So they say that the RSI works best in range-bound markets for identifying the boundaries of potential support and resistance. But I'm showing you right now, like, just how you can use it. And yes, it is ranging between, you know, these price points, right? High here, there, and the lows here. So it is ranging, and we're finding bearish divergence and shorting from supply, and you can see the demand zone just here, right? Just here, demand zone there. There is one here which it does return to, which is usually what I try to look for. So to the best of my ability, I do look for a return to the order block. So my potential first take profit would be here. Previous structure broken, demand zone would probably be a full close there, and maybe let profits run to this demand zone, which is that demand zone is that candle there, all right. And I think it just touches there, which would be your swing trade back up, right? And now tying that into resistance RSI is, so we start to pull back. So pull back here, and then we start pulling back like that, like it's pretty aggressive, and it's very choppy. You know what I mean? So there's a clear impulsive move here, bit of weakness. That's why the clear impulse is so sharp. Weakness, right? Because we're coming into that oversold territory, right? More up and down structure here, right? And bang. Okay, so we can see this sort of, it doesn't give us impulses like stepping impulses. It comes up, you know, so there's clearly people buying into the weakness. Like there's buyers in here, and they're probably stacking their orders. Buys, buy, yeah. So and the sellers are selling, and if there's an imbalance, they're going to push it up to average. Because when they're short, if there's not enough liquidity, then it will average down until it hits all the orders, and then it pushes back up once the imbalance is done, and people buy. So everyone's counter trend trading in here and in here to trying to catch the bottom. So which aligns with that demand zone here. So that's why there's that candle there, and that demand zone here. So let's push up from here, and then this demand zone from here, which allows us to push up from there. Okay, so we start to get our divergence here. So that's our divergence on the RSI. So bullish divergence here, it's oversold. We have a key level of demand here, and we have these levels of demand also being respected because there are impulses, meaning that there are buyers in the market at these levels. So there was buyers here. Now then, and they may be low leverage trades, big position, low leverage. So that means that their liquidation is probably going to be very low. Right? If it's 5 to 10x, large position sizing, then it can have a larger stop loss. So the point of interest and the buy for here is here, which I did mark on another chart, but this is all fresh. So there is your RSI bull divergence, demand zones respected, and it's also a zone of support, I guess. Strength moving up. All right, so go back. Let's have a look. Yeah, so there was an old equilibrium about here. So resistance, support. So an old EQ there, which aligns also with about here too. So which is the zone. All right, so the zone, remember that zone? So no, it's not just a line, it's zones. 35,000, yeah, 34.5, 35.5, yeah? So that would be our long point of interest. So capturing demand, stop under the lowest low, and coming back up to the supply target, which is a big move, 29% there, and the total move for this one was 17%. Now back to demand, which is 22% there. so that's adding RSI with supply and demand and points of interest. You know, a little bit of break of structure, stop hunt, break of trend here, and just capturing, you know, how RSI moves. So if we're buying here, then it's going to come back to the mean eventually. How fast it comes back is, you know, only time will tell. So then how fast it deviates again, only time will tell. But, you know, we are coming into oversold territory once again, and look, we are in another. So this is called the offspring, which just means that it's the offspring of the main supply zone. So this is an offspring. Alright, so instead of aiming for this supply zone, you aim for the offspring, so somewhere in the offspring of this supply zone. So there you got a greater chance of getting your profits taken, which I did take. I got in about here on the reaccumulation period, and it played out for me over just before actually. So I also went short. I can't remember if it was here or somewhere, and it played out overnight. It's also. So yeah, that's RSI. So no matter what happens with RSI, it will never, like, if it's really strong in a trending market, then it may just stay up here. But if it's trending in a trending market, then it will come back to the mean and go, right? So here, but this is more range bound in the bearish territory. So oversold, back to the mean, right? But so it's moving down. It's moving down, but you can see the lows are starting to get close until it doesn't even break. So, you know, that's where you'd be doing your boss. So to confirm the downwards momentum, you know, that's where you see, how you visually see, right? No boss, okay? And RSI does dictate that also. So it's starting to come up, right, from the lows. So the lows are starting to move up, and even the highs are starting to move up as well. So it's starting to tell you that there's potential something like this coming. So whether you're, you know, trying to short from here, or, you know, bang, getting it from here, so that's your short there, right? And you're trying to take it back to the zone. So that would be, you know, and it is a descending triangle in some respects, like the shape. But there's strength coming into this move to liquidate the short sellers. So shorts. So there's all liquidation. There's all money here. Yeah, there's money there, right? Because there's stop losses. There's stop losses somewhere up here, right? So now all this territory has become marked with stop losses. So, but bang, take it all out. Go back to the trend and continue. Back to your trend line and continue. So your major trend and your intra trends. So there's a bit about that. You got a head and shoulders configuration on the RSI, and patterns on the RSI is fine. You know, you can have patterns on there. You can have head and shoulder, just like that. Trend continuation, bearish trend continuation. It might not look like that on the chart, but in relation to the strength, it's right there. Okay, right. There's confluence there for a short. Okay, that trend, head and shoulders, 3 confirmations, and you're off. Now, your triangle is there. Another continuation one. You're getting constant break of structures, and up and bang. Right. So you can probably even do your thing there to get the majority of the wick lows. Right. So these are just, there's liquidity in here, and in here, and in here. Okay. So there's potential liquidity all in here still. So it's just trying to take it, and that's all it does. This is messy. This is really messy. Well, I wouldn't want to be caught in here, that's for sure. No, you want clarity. Alright. So there it is, oversold, divergence. Right, and SR zone there, you're short, you're first short. Okay, break below, and as it trends down, so does RSI in the bearish territory. There you go, there's a reversal there. So like a 1, 2, 3, 4, 5, 6, like 6 bottoms on that support zone. And you can see the support was down here, oversold, and then moving up. The highs are still equal, right, which is still bullish. Highs are equal, even though they're equal higher and lower with equal bottoms. Still bullish structure in there. So marking the period of accumulation is just in here until the break above. Okay, and then your potential long would be in this consolidation phase on the break there. Alright. Now, yeah, you do get divergence here, but this is where the return to the mean. So you return to the mean, but your price action is moving upwards still, so which is bullish. So return to the mean reversion, and price action is moving upwards in consolidation or reaccumulation here in a demand. That's bullish, so you have a continuation up. Right, now we have another divergence of the highs here. So this time, yeah, I'd say people have been holding from here, and here. Somebody's got to take profit soon. So, but you've also marked a sell zone, right? So sell zone there. Just give me that. No, the highs, high. So in that comparison, but in this comparison again, it is a bearish divergence. But again, I don't like to go back that far. I try to keep it relevant. There's clear bearish divergence right here. I don't need this data from back here to know that that's bearish divergence at a resistance zone that's had a fake out. You know what I mean? So there's a fake out, resistance zone, and bearish divergence on the RSI. Well, I don't know if it's a no-brainer, but it's a short for me. So, but yes, this is how I see RSI, and I hope that it helps you in some way in using this tool. It's a great tool. I think it's really good, and I think as a beginner that you should have against popular opinion of price action. I think beginners should have an indicator because it just gives them something to look at rather than trying to guess candles and structures and shit like that. There's something here that can tell you if it's bullish, bearish, and as long as you understand that returning to the mean what it is, so returning to the mean is potentially returning to resistance in the bearish side, right? And returning to the mean in the bullish is a continuation side, right? So regardless, it will always return at some point. Nothing's ever perfect, but it will return, and it will break, and it will retest, and it will do all the things that price action does. Break, retests, structures, patterns, trending markets, highs, higher, lower, low, higher, low, high, equal low, higher low, so forth. So there's plenty in there in that regard to what you can do with RSI and how you can relay the information onto the charts, and I think that's it. So I've gone through what each section is. Obviously, if it goes lower, then the chances of it reverting back are even higher. The lower it goes, the higher the probability it is to revert back to the mean. Vice versa, the higher it goes, the higher the chance or probability it reverts back to the mean. Okay, so here. So the high is here. All right, we've still got high structure. Okay, and there is a demand zone created in here, pocket liquidity, which just gets pierced by the looks of it. Yep. Okay. So I think I'll leave that there. I hope you enjoyed the video.